Good morning. It's like waking your kids up. Good morning. Excuse me, that is not how I woke up in the morning. Get up, it's time to get up. When I was a kid, stuff needed to get done. I seem to have a shadow this morning. How are you guys? Where are you from? What you got going on? Let me know. I sure hope this morning my comments work. Last week they didn't work, remember? Let's hope that works. I would say comment and let me know, but I'm not going to see them anyway, am I? If they're not working. So, let me see here. Oh, yay! Hi, Brandy. I can always count on you. Oh, awesome. I had somebody email me yesterday that said they've listened to all my podcast episodes 3 times. That's more patience than I have. Let's just say that. But thank you. That's awesome. I'm glad that you are constantly learning. That's good. We may not have. Let's just hang out for a few more seconds. Everybody else say hi. We may not have a lot of people this morning. It's nice out. It is go time. And it's hardly raining anywhere that I am aware of. I've only talked to 3, maybe 4 people that are getting rain. Louisiana, Idaho, who did I talk to yesterday? I think Ohio. He had a lot of rain. And then somebody else. I forget what state they were in. And they had a lot of rain. Here. Yeah, rain. Hopefully on Saturday. That would be awesome. Okay, now we're getting somewhere. Say hi. If you guys are listening, say hi. Let me know where you're from. I would appreciate it. Okay, I'm going to get started. We're 5 minutes late already. For those of you listening that have not listened before, I am Mary Jo Irmen. I am the author of Farming Without the Bank and Life Without the Bank. And I teach the infinite banking concept. So every week we go over meetings of clients. Last week I missed because I took a day off. I didn't really have the day off, but I took the day off from this job. And so I'm going to throw some of last week's in and this week's. So because last week I had some really, really good meetings too, and I want to make sure that you guys hear about those. All right. Hey, Jeremy from PA. Are you guys getting rain over there? I talked to a guy. I have a lot of clients in Pennsylvania. It's funny how I get like certain states. Pennsylvania is one of those states. Hi, Erica. Where are you at? Okay. Let's see. It is a wide range. Last week, here's the thing that I had last week. Lots of inheritance stuff, which isn't, I don't want to say it's not normal, but obviously it doesn't happen a lot. And so let's just start there. So I had one lady who both mom and dad just passed away. Estate finally got cleaned up. And so they did not know. They knew that mom and dad obviously had some money, but they didn't know to what extent or where it was or what was going to be done with it. And so it is it's been put into some sort of an investment. She didn't really know a lot about the investment, but it's been put into some sort of investment, and she is going to get paid from the interest, I'm assuming. She's going to get paid every year between 100 to 150, and then it should surpass her lifetime into her kids' lifetime. So it will go on that's the theory, right? It's going to go on just for the next generation. Well, it will probably go on past the next generation if she does a policy. Because think about it, if she's got all this money coming in and she is not going to stop working and she is not going to stop ranching. She ranches with her kids. She's not going to stop doing either one of those things because that's what she loves to do. And she loves her job. And so why would we stop? She is not frivolous spender. She is going to save the majority of that money. She doesn't really have a need for it. She's not going to go buy excessive amounts of things. And so if we're putting this money into life insurance, I don't even remember what her death benefit was, because I wasn't paying attention to that at the time. We were talking about so many things because she has a lot going on with how it's all going to get structured and taxes and all that sort of thing. But at her age, we should be passing on probably, if she puts 100 in every year, we're passing on a few $1 million, right? Now, to the next generation, that's going to be huge. The other siblings are most likely not going to do that same thing. And so when theirs is done, it's done. She can keep that ball rolling. Had another client, same thing. They inherited quite a large sum of money. And this one is really interesting as well. So the first lady, hers is all set up. Mom and dad set it up. This is how it's going to get paid out. They didn't have to make that decision. In this other scenario, they're having to make the decision, except they are the grandkids, not the kids. And so the kids, the immediate children, get to make that decision. And then we've got these grandkids that have gotten it because their parent died, so it went to them. So it has been interesting. It's been interesting working that scenario because let's just say that they inherit $1 million. If we take that million and put it into life insurance, that million is going to produce $10 million of death benefit on them. If they obviously keep paying premium, they're going to have $20 million of death benefit by the time that they pass away. So we've taken $1 million, turned it to $20 million income tax free. The people in charge of the estate are like, ooh, you can put that in this investment and you can get a 4% rate of return. You can live off of the interest only. And so let's talk about that for a sec. If we live off of the interest only, I don't even care if it's the aunts and uncles, right? Because they're probably, I would say, 60s most likely. 60s, early to late 60s is probably how old they're going to be. Some of them may even be 70. And so they could even be in their 70s. So they're thinking, oh, this is fantastic. We're going to put it in. We're going to live off of interest only. They are not considering what's going to happen to the grandkids because they have so much longer to live. Inflation of the dollar. Even let's say that it's $100,000 a year that they're, just for round numbers, that they're going to live off of. $100,000 a year today is not going to buy $100,000 worth of stuff in 20, 30 years from now. And so we even looked at, I think I ran the numbers. I think I ran the numbers at 160. Inflation in 20 years from now that 160 is going to feel like $70,000. That's huge. No one's living high off the hog, right? And they're like, oh, this could go 2 generations. That's not going to go 2 generations for them. It might go 2 generations for you because you're going to be dead in 20, 30 years. It's not going to go 2 generations for somebody that should live another 50, 60 years. So we have to look at like the big picture and the scope of things. If they want it to go generational, they have an opportunity to leave their children $10 to $20 million. Grandpa's money is going to go a heck of a lot further than if we did nothing. I am super excited to see how this goes because this is truly generational wealth. Even the lady that I talked to that's inheriting it every year, that's fantastic because she is going to leave more wealth for her children than her parents ever thought possible, right? Because they're just thinking, okay, well, it's going to go a couple generations because of what we did, but what happens if it can go 3 or 4 generations because we're actually teaching that next generation how to pass that off, and we're using the discounted dollars to do that. Oh my gosh, is that exciting to me. And so I haven't ran all the numbers for these people yet because we still have some stuff to figure out along the way. And so I love to look at those and run those strategies, but I'm not going to spend tons and tons and tons of time doing so when we don't know what's happening and how it's coming to us and when it starts coming, because neither one of them know when it's going to start coming or when they're going to have opportunity to have access to this money. We're in the very early stages of this. And as you guys know, estates take forever to close and get finalized and all that kind of stuff. And so we're talking about it so we're prepared, but all we can do is kind of run preliminary anything, and then we can really look at how that's going to go. But here's the other thing. If neither one of these people need all this money, they have an opportunity to lend this money to other people. Right now, hard money lenders are getting 10%. A hard money lender is just somebody with money that is going to lend money to somebody else. A lot of times it's done in flips for real estate, but you can do it in whatever you want. And so what if there is some young farmer that you know, a farmer or rancher who wants to start, but they just are never going to have that opportunity because the bank's not going to lend them money. They don't have any kind of inheritance. It doesn't mean that they can't work for it, but what if you could say, you know what, I'm going to lend you money at 6 or 7%. Then you can help other people get started. They could start some sort of a foundation for that. Like, it is so super exciting to have opportunities because Nelson always said, where there's money, opportunity will show up. And so there is going to be a lot of opportunity. And both of these people are being super, super smart about making sure that they cover all of their bases before they do anything. They're not taking everything I say as gospel. They are doing their research and they get to make their decision what they want to do. What happens is when people come into money and then all the other suckers come in and they want access to your money, or we just go spend it all. Neither one of these people are spending it all. They're being super conservative because they don't want to make the wrong decision, which I think is phenomenal. I absolutely love it. So that was that. The inheritance part is exciting. And you might not end up with inheritance, but that doesn't mean that if you do this process, you're not going to leave inheritance for somebody, right? And making sure that it's handled correctly is super important. But if we can take $1 million and we can turn it into $10 to $20 million, please tell me where else we can do that income tax free. and still have access to all of our money and then some. This is huge, and people miss this entire piece of it for estate planning. Huge, huge, huge. Okay, let me see who else is commenting here. Oh, Iowa. Hey, Erica. I talk to people in Iowa all the time. There's a rainy side of Iowa and there's a dry side of Iowa. That is what I know about Iowa at the moment. And land is expensive. Rains every couple days, Jeremy? Well, that would sure be nice. Well, I shouldn't say that because we want to get in the field a little bit. Hey, Jessica. Good morning, Dave. Oh my gosh, look at all you guys on here. Yay. Hey, Bruce, where are you at today? New York. Good morning, Jim. Hey, Heidi. How's it going down there? Sunshine. I love the sunshine. Hi, Lindsay. Oh, yay, that's exciting. Hey, Lindsay, did you get your house? Let me know. I've been thinking about you. Okay. I had another guy that, let's see, who do I have here down here? I had another guy last week that was here. I've had this theme. Well, it's a kind of a theme every week. Cash flow. And you guys have heard me say this over and over and over. Cash flow is king. We can be debt free. And there is good debt and there is bad debt. Good debt means that debt is actually creating income, cash flow, so we can pay for other things, right? So not all debt is bad. I had 3 people that say, oh, I want to pay all this stuff off. And one of them was a farm management type teacher or coach or whatever you want to call him. Super, super awesome program. I get it. But even he wanted everything paid off. And I had to remind him, a low interest loan is not horrible if we can create cash flow. And I'm reminding everybody of that. It is about cash flow. You guys remember, the bum on the street is debt free, but he's begging for cash flow. You must have cash flow in order to buy things. I don't give 2 craps about what your net worth is. It doesn't matter to me. The only person that cares about that is the bank, so that they have something for collateral. If the bank actually cared about cash flow, they would care that you market your grain. They would care what the commodity prices are instead of freaking out at the last minute. They would actually look at cash flow, right? And they do to an extent, but they want to know what your net worth is. I had a guy yesterday that started his second policy. And he said, he started the first one really small, and he came back and he's like, yeah, I'm ready to go all in. And he said, you know what was the most amazing thing? He said, I filled out my balance sheet, and he said, I bought life insurance, and all of a sudden my net worth went up. And he said, so now I look better to the bank because I have all this extra death benefit. They didn't even ask me about the premium. Because he's not in financial straits, right? Like, he's got everything in order, so the bank isn't babysitting him. Typically, the bank is only going to babysit people that are not really managing money or they're upside down. So I had a guy that was like, I added up this morning, $1.4 million upside down. Not 1.4 million of loans, 1.4 million of old debt due to a fire and not having the correct coverage. Now, this has happened a couple of times that I've come across now. Either we are not insured properly on the property side of things, fire, snow, collapsing buildings. If your agent is not telling you how to be covered correctly, you need to make a phone call to that agent today and say, you need to come look at my stuff. Because if you are only covered for replacement cost, no. Actual, I'm trying to think of the terminology. It's replacement cost versus current value, or the value of the building. Oh, the words are escaping me. But let's say that your building's worth $20,000, but to replace it's going to be $100,000, right? If you are not insured for replacement costs, you're getting $20,000. He was not insured for replacement cost. He had some other things that were not being covered, like loss of income, because it was a business building. He was not covered for his loss of income. Well, guess what? He is now upside down. So he says to me, and I typically don't get super ornery in meetings. It's actually pretty rare that the German passion comes out. That the German passion comes out. But he said to me, after we get all done with his loans and what he owes, he said that he wanted to refi his house and do like a 15-year mortgage because he didn't want to pay all that interest. And I said, oh, the hell you are, was my response. Probably not the best response, but it just came out like that. Okay? And I'm not being judgmental. It's, what are we doing? We need cash flow. We are so upside down. We need cash flow, but yet we are so worried about paying interest to the bank that we want to do a 15-year mortgage and saddle ourselves with a higher payment. Why are we doing that? Do a 30, get yourself some cash flow so we can get some of this old stuff paid off. Kudos to him for not wanting to file bankruptcy. He could have very easily done that. He is going to make everybody whole. And he has a plan to do it, and it's going to be done in the next few months, which is awesome because we're selling some land or a building or something. And so that's absolutely fantastic. Kudos to him. But the stinking thinking of being debt-free and doing these short-term mortgages, I went through the same thing this week with people. Oh, I'm going to do a 15-year mortgage. Oh, I just refinanced to a 20. I'm like, I had a wonderful young guy yesterday. Why a 20? Well, I don't want to pay all that interest. Well, Mary Jo, if I do a 30, I have to pay all that interest. You don't have to do anything. You can still pay it off early if you want. You're not committed to making 30 years worth of payments. Nobody's giving you a penalty to pay it off early if it's a traditional mortgage. There are some FSA loans that do that, so you do have to watch some of your loans. But if you can pay things off early, why not give yourself a little bit of cash flow, a little bit of leeway in your cash flow? It's absolutely crazy that we are crippling ourselves and we don't know what we're going to get paid tomorrow. I don't care if you're a business owner or a farmer. We don't know what we're going to get paid. Do a 30-year mortgage. Do a 40-year mortgage on land. Stretch that stuff out as far as you can. And the wonderful guy I talked to yesterday, he just refinanced in February. Okay, I maybe wouldn't refinance then. I wouldn't refinance again to stretch it out 10 years. Okay, but the next thing we buy, let's not go 20. Let's go 30. Let's not do 15 when we're $1.4 million upside down. Cash flow is king. I did have one guy that got that, and he says to me, you know, they have small acreage, like his dad has really small acreage. He just moved home due to COVID, and he would like to buy the small acreage that dad has from mom and dad because they're getting older. So he would like to buy it from them so that Medicaid can't take it. And did you hear what I said there? Medicaid can't take it. The nursing home does not take anything from you guys. It is not the nursing home that takes your stuff. It is Medicaid. If you want to qualify for Medicaid, you have to sell everything to pay the nursing home, okay? So that the nursing home then can get paid from Medicaid. The nursing home, no, I said that wrong. You have to get rid of everything because Medicaid, in order for Medicaid to pay, you can't have anything. The nursing home has to pay Medicaid, okay? So the Medicaid office is out there telling the nursing home, you need to get me paid. You need to get me paid. So the nursing home's not taking anything. Let's not be blaming the nursing home for that. So anyway, he wants to buy the land so Medicaid cannot take the land. And then he can farm it, do whatever, and save it. However, Dad is a traditional farmer, went to small acres. He wants to just plant stuff and not keep any books. I don't know what it's going to cost. I don't know what I'm going to make, but this is what you plant when you're a farmer. Plant some beans. No. You need to know your numbers. I don't care if you're planting 5 acres or if you're planting 5,000 acres. You need to know your numbers. Why are we just going to go backwards? It doesn't make any sense. It's a business. Run it like a business. And he gets that. He understands cash flow. He understands in making money. He's been listening to Robert Kiyosaki. He's been listening to my stuff. He is out there understanding all of these things. Who is he not listening to? Dave Ramsey and Susie Orman. And all these other talking heads that tell you to be debt free. That's not creating any type of cash flow, any type of passive income. He wants to create as much passive income and build some buildings and do these sort of things so that he has the ability to take care of his parents when they get old, because he doesn't want them to go to a nursing home, ideally. Cash flow, my friends, cash flow. Hi, Danny in Arkansas. How are ya? Oh, hey, Ed. That's cool. I will look into those. Jessica, cost of lumber is insane. Jessica, I thought that their house was done before all of the lumber stuff. So did they have replacement costs and the insurance company didn't pay for that because of the cost of lumber? Oh my goodness. I never even thought of that. But they should have, because that's just what the cost is today. Okay. This is, let me see what I got here. Make sure I don't skip anybody. I had a super, super nice young guy. He and his wife have really good off-the-farm jobs. And so he is buying some land, but his dad wants to sell him just like 10 acres or something like that so that he can build a house on it. And so his question to me was, Mary Jo, do I go to FSA, get, I think their loan rates like, it was ridiculously low. I thought it was like 2.5 and it's lower than that. It's like 1.85 or something and zero money down. And he's like, do I go do that? Or do I, use all the equity from my house and put it in and to pay down the note? Again, no, if you can go to FSA, like this kid, they're in a good situation. They're making over 6 figures a year between the two of them. And they're in a really good situation where FSA is going to most likely be easy to deal with if you have a good lender over there. So FSA is no different than any other bank. There's always one FSA office that has a power struggle lender, and they want to pretend like they're all that and more because they're in a power position. And so if you have a good lender at FSA, they're not going to control everything. If you're making 6 figures a year, they're most likely going to be somewhat easy to deal with. And so if he can go to FSA and get a low interest rate loan, keep his cash to buy the neighbor's land and use that as a down payment there, or to buy some equipment or to buy some cattle that are going to create cash flow for him. The cattle will create cash flow, ideally. Then great, let's do that and use that liquid money to expand the operation rather than we put it into the operation and then we have to wait to expand, which is the exact same scenario that I had with another client who is newly, I see these a lot. single women that are farming or ranching all on their own after a divorce. And she's just buying a house with cash. And then she's like, well, I need a piece of equipment, so I'm going to buy that with cash. I'm like, no, you're not. Do you need that piece of equipment right now? We don't have a lot of cash. Due to the circumstance, we have not any cash flow coming except the rental income from the land that she's renting out at the moment. So we have limited cash flow. We have limited cash. Do we really need that piece of equipment? Can we hire somebody to do it and plant and harvest until we have the cash flow for that piece of equipment? If we need to have operating costs, don't buy a piece of equipment. Don't even pay cash for the house. But that's done. I can't stop that. That was already done. So money gone. But ideally, finance the house, custom hire somebody, barter, whatever we need to do until we have enough cash flow and we've stabilized and we know what we're doing. Because she's not really sure what she wants to plant. She's got a lot of ideas and she's super smart about making sure that the numbers work and that she has all of her numbers in order. Because guess what? When she was married, that wasn't the case. Land was given to them. Land had to be sold because she kept the books, but the other half would not listen. And you guys, I don't care what half it is. I'm not picking on men here. I'm not picking on there's like this whole thing with farmers getting divorced and everybody's pissed off at everybody. Get over that and just look at the fact that in relationships, and I see this all the time working with couples, one of them is doing the books and it is typically the wife. Typically the man is outside doing the work. He therefore is not listening to her when she says, don't go buy that new piece of equipment. Oh, but he does anyway, right? So the land is given to them. We've spent so much money. We've not marketed grain because that was a dumb idea, apparently. Nobody markets grain. You just haul it to the elevator. So we're not marketing grain. We're not running it like a business. She wants to make sure that she runs it like a business and it makes money. And she's being super, super, super smart about it. And I absolutely love it. But we have to think about cash flow. She needs cash flow coming in to make sure that she's getting paid, right? To make sure that she's making money and she can do what she can do. So let's not saddle ourselves with a bunch of debt. Let's just lease the tractor from the neighbor if he'll let you use his tractor. Let's have somebody custom hire it because she actually wants to do the physical work. That she loves farming. She wants to do it. So fantastic, do it, but lease it from somebody until then because she has people that she can do that with. Don't go saddle yourself and use up all the cash you have on hand because you don't want the payments. Here's another thing in her situation. And there's a lot of men out there that are not mechanical. They want to farm, but they can't fix anything. So again, gender doesn't matter. But if we have a piece of equipment that we bought a used piece of equipment because that's all we can afford, now we also have repairs. So even if she goes to buy a piece of equipment, she also has the repairs that she has to figure in. Well, what are those repairs going to run you? Sometimes it's a lot nicer just to have somebody else paying for those repairs and their downtime as long as your crop gets off. And we kind of experienced that firsthand. You know, we bought this land and I don't want cows. I love them. I absolutely love livestock. It was my favorite part of growing up. I did not particularly love the farming side of things. It was a little boring for me, but I loved the cattle. However, you gotta feed them twice a day. And they're idiots and they get out and right, they're cattle. They're wild to an extent. And so they can't take care of themselves. They're like babies. And so what did we do? We leased out our pasture to have it grazed. Well, guess what? We get out there one day and the stock tank's empty. And he rotates his cattle, so they rotated on our land. And they just found the water apparently, so it's all empty. And they're pulling the stock tank away from the gate. And I'm thinking, oh my God, they're gonna break the float. This is just not gonna end well. And so I call him, I'm like, the girls are dry. You need another hose. We don't have a hose out here. So we need another 100-foot hose. We'll hook it up. We'll get it into the stock tank. He came down with another float. He rotates them to another part of the pasture. They tip the stock tank over. It's all dry. It's just a mess. He moves them to another part of the pasture. Same thing. And I said, this is why I don't want to own them. Because it was really easy to just call somebody and say, hey, come take care of them. I loved it. I got to have the cows on there. I got to have all the benefits of the cows, but I didn't have to take care of them. Love it. So if we don't have to buy a tractor and we can have somebody else fix their tractor, as long as our stuff gets taken care of, does it matter? Not really. Not really. She can spend her money on the other things that she wants to do that are absolutely freaking brilliant, right? Like, a lot of people, here's one thing that we were talking about, is alfalfa. She is in the middle of nowhere state that she's in. Every state has the middle of nowhere traditional farming and ranching mindset. Well, she's like, well, you just make round bales. I'm like, no, you don't. I have clients that are making a small square and selling it to horse people because most of your rodeo show people are women and they can't lift, or they can lift, but it's hard to lift those huge square bales onto their trailers. They are paying more for a smaller bale. So make your smaller square bales. I even had somebody tell me one time that their kid took a square bale and put it into quarters. He quartered it up and rewrapped it and sold it for more than they were selling a half of a square for. Like, where's the market? Think about, how are we going to get it to those people? I have talked to people, I actually have a client who they buy round bales and they repackage them as squares. There's crazy things to do, and she's open to doing those things. It's just a matter of needing the cash for some of those things that you're maybe not going to be able to hire out. Okay, that was a really long explanation, but I'm excited for her. What else do I have? I had a lady from Hawaii this week. That was exciting. And what was even more exciting is, their culture is a little bit different over there. And they are starting a piggery. And I thought, well, first of all, what's a piggery, right? Well, it's just a pig barn. They call things some things are a little bit differently named. So they are starting a piggery. They're getting help with the building. And in Hawaii, they have to go to the resorts have to do something with their grass clippings and their trees and their branches, and because they have to keep it all pretty for us people when we go down there. But they actually get paid to take that stuff. And then they get to use a lot of that stuff for bedding for the hogs so that it keeps the smell down so that their neighbors don't dislike them. So they've got this income coming in from that. And I said, that is not part of your piggery. You can't count that as part of your income because it's essentially a separate business. This trucking company is picking up the green waste. The piggery is buying the green waste because the piggery would need to buy it if it wouldn't be getting it. So we have to be somewhat honest about that and not count that as income. And she didn't really have her numbers ready, which was totally okay because everything was sort of in the early stages of it and she just wasn't really prepared. And so we'll most likely have to talk again. But this is what I found interesting, is pigs are a huge thing down there. And the wild pigs, they eat. Wild pigs to the natives, I guess you would call it. I mean, like she said, their culture is so diverse, so I don't want to say that. I don't know if those people would be native to Hawaii because I don't know enough about Hawaii, but they love the wild pigs. So, but when we come down there and we want a luau, it's always a domestic pig. And so it was crazy to hear from her how many pigs are needed from them. They don't even have the pigs yet. They don't even have the building built yet. But how many resorts have reached out and said, we need X amount of pigs, like 15 pigs a week, or we need, between all these resorts, I think they were at like 60 or 70 pigs a week. And we're not cutting up pigs like we do in the state, cut them up for pork chops, right? No, they're just like slaughtering the hog, cleaning it out, and shipping it away because they want the whole pig for the luau. And so it was very, like, I never thought about, when I was in Hawaii, I didn't think about, oh, where'd that pig come from? Like, I just didn't even consider it. Like, it's just a pig. And so, again, and I admit, like, how a lot of people won't admit that they don't think about that stuff. I do. It might make me look stupid, but whatever. If I'm not thinking about it, who else isn't thinking about it? That pig just shows up. So what a huge opportunity down in Hawaii to say, you know what, we need pigs, and obviously there's a lack of them, except wild hogs. There's wild pigs everywhere, and she said we don't even have the time to trap them all, but people would love for us to just trap them because they eat them. I did not know people ate wild hogs. I just assumed that they tasted horrible because that's what I've always heard. So if anybody in the States is eating wild pigs, or the mainland is eating wild pigs, I think that would be interesting to hear about. Had another guy last week, or another guy this week, that he was just sold an indexed universal life right before he heard about my stuff. Not the worst policy I ever seen, which is good. However, it is really, it does not work the same as a whole life, right? We have no guarantees in an indexed UL. No guarantees. Your guarantee is that it's never going to go below zero, but then they still charge you fees and expenses, so it does actually have a negative rate of return. There are no guarantees. It goes up and down with the stock market. His death benefit stayed the same for a very, very long time, and then it did go up. But I never seen that it went to zero. It was done on like a 3.5% rate of return, which was pretty decent. At least it was not overshot. And this was an interesting scenario too. He's got his own operation going. He's not farming with mom and dad. And I've had a couple of these scenarios where there is one sibling farming with mom and dad, and it is a sibling that cannot hold a job due to just shitty attitude or drugs or alcohol or whatever. So mom and dad say, oh, you can come home and work for us. No. You know what, you guys? I have heard Jolene Brown say this. And if you don't know who Jolene Brown is, just Google Jolene Brown. She is an egg business consultant. But if nobody else is going to hire him, why are you hiring him? You do have a business to run. And if you're hiring crappy people to help you in your business, how do you think your business is going to go? I understand they're your kids, but that does not mean that they should be working for you if they can't hold a job somewhere else. What are we doing? We're destroying our operation. We're destroying the family because the kids that do know how to work are getting penalized. Think about that. Tough love might be something that needs to happen there. But they're doing fantastic on their own. And now he just gets to decide what he wants to do, with his new policy. Does he want to go this route? In his IUL, there's zero cash value for 2 years. Not until year 3, he has a 10-year penalty. So, or surrender charges. So in an IUL, in a universal life, in a variable, you're going to have surrender charges for 10, 15, or 20 years. He's got surrender charges for 20 years. So if he keeps paying into it, there's no money left. I can't tell him what to do. At the end of the day, it has to be his decision. These are the facts. You get to make a decision based on what we talked about. Anyway. Okay. Let me see. If you guys have something to add it now. Oh, a limit on replacement cost. I suppose. Because you're going to have it's going to be insured for a certain amount. That stinks. I didn't realize their fire was then. Hey, Ed, thanks for tagging people. That's awesome. All right. I have one final thing. So if you guys have comments or questions, let me know. Somebody asked, this was funny because I got a message the other day from somebody and he said, Mary Jo, I don't know how you're ever going to be able to talk to all of these farmers if you're just one person, but I hope you have enough time to visit with me. You know, here's the deal. Farmers are, and I hear that a lot. How are you going to have time to help all these people? Farmers are 1% of the population. And only 1% of that 1%, right, even care to make a change. And I heard someone say this the other day, that we do not make a change because the pain of making that change is greater than the pain that we're in today. So we have to be in enough pain today to go ahead and make the change. How many farmers are in enough pain to say, you know what, it's less painful for me to look at my numbers and learn something to make that change? I don't believe I'm ever going to be that busy that I can't help people. And if I am, great, I'll have other agents that help. And I hope that I can be that busy. But at the end of the day, not everybody wants to make that change. And we don't see it that way because we're out there thinking this is the greatest thing ever. And oh my gosh, we're Ed. And we're tagging people, right? Because we want them to have the information. But will they actually do something with it? You guys, I've sold 10,000 books. I've sold over 10,000 books. I don't have 10,000 clients because not everybody wants to make that change. It's painful. Or like I had a guy yesterday that I hadn't talked to him in, it was about a year. I have a lot of people that are a year, 2 years out and they're coming back and now is the time to start. And I said, so have you talked to a lot of people in the last year about this? And he's like, oh yeah, they all tell me it's a bad idea. One lady told me last week that her dad said, you be careful with that. That, make sure you're not getting into something that's bad. She said the same guy that's lost money in the stock market 3 times he's lost big told me to be careful with this. The same guy that bought IULs or ULs. Right? So there's a reason. Yes, absolutely. I agree. Be careful. But like right now, I'm only booked out I think you only have to wait 3 weeks to get in to see me. That's nothing. I was out 6. So now is a great time of year to be making your appointment because you don't have to wait so long to come see me. People are not wanting to make change. They have to know their numbers. They have to look and admit what's going on. Nobody wants to do that. So don't worry. I will be here for you. If you guys have not gotten the books, please do. If you get Farming Without the Bank or Life Without the Bank, and then if you can get Nelson's book, who is the founder of the concept, if you can get Becoming Your Own Banker right away, do that as well. You can do that on farmingwithoutthebank.com, or you can actually go to withoutthebank.com, and you will see that one. That website is mainly for life, but they are all there as well. And so if you know a business owner that is sick and tired of the banks, the Life Without the Bank book is written mainly for business owners like myself, because I'm sick and tired of the bank. You don't have to be a farmer to be tired of the bank. You just don't. But we have to start somewhere. And this is the place to start. Okay. Why, thanks, Bruce. I appreciate that. Let me know if you guys need anything. You can email me at maryjo@withoutthebank. You can message me on Facebook. Whatever, I answer all of the Facebook messages. That's me. I do not have somebody hired to do that. So let me know if you need anything. Otherwise, you have a absolutely fantastic week, and we'll see you next week.